Namaste one and all. Today, as promised in my earlier video, I am going to explain you about N.P.A classification and N.P.A provisioning. Instead of N.P.A classification and N.P.A provisioning, it is better to say that this is actually assets classification. Instead of telling N.P.A classification, we can say it as assets classification of the bank assets. Bank assets we can say as transaction assets and other assets. Here transaction assets means OD account and CC account are called transaction assets or transaction accounts. Here the RBI says N.P.A classification or assets classification, assets are classified into two, performing assets and non-performing assets. In case of performing assets, it is called standard assets. In case of non-performing assets, those are not performing assets, those are not standard assets, are called non-performing assets. What is the N.P.A? N.P.A means which is not generating any income to the asset is called non-performing asset. In non-performing asset, three types are there. One is substandard asset, second one is doubtful asset, third one is loss asset. In substandard asset and doubtful asset and loss asset, all the three are called as non-performing assets. In doubtful assets, again it is bifurcated into DA1, DA2 and DA3. In DA1, the assets will be kept in for the period of 1 year. In DA2, it will be from the date of categorizing as D2, it will be 2 years. In D3, afterwards, after 2 years in D2, it will be called D3, D3 doubtful assets. So here we will go for allocation of provisions. Here Reserve Bank of India told even it is standard asset also, even though it is generating income to the asset also, those also should be allocated some provisions. In case of standard assets, various types of standard assets are there. In this one, the provisioning requirements for all types of standard assets stands as follows. Banks should make general provision for standard assets at the following rates for the funded outstanding on global loan portfolio basis. Farm credit to agriculture activities, individual housing loans and small and micro enterprises, SME sectors at the rate of 0.25%. Again I am telling, credit to farm credit to agriculture activities, individual housing loans and SME accounts at the rate of 0.25%. Next, advances to commercial real estate, CRE, advances to commercial real estate at the rate of 1%. So, advances to commercial real estate, 1% provision should be made. Advances to commercial real estate, residential housing sector, that is called CRERHA, it is 0.75%. Housing loans extended at teaser rates, provisioning for housing loans at teaser rates. I am explaining you this is what is a teaser rate, teaser rates and teaser rates housing loans. It has been observed that some banks are following the practice of sanctioning housing loans at teaser rates, that is at comparatively lower rates of interest in the first few years, after which rates are reset at higher rates. Suppose for 15 years housing loan one customer has taken, first 5 years rate of interest may be the lower rate of interest, and after 5 years it may be the higher rate of interest. Since the customers may be getting income at lower levels at the first initial stages, afterwards their income may grow or their income may increase. That's why these teaser rates loans are very much familiar. The practice raises concern as some borrowers may find it difficult to service the loans once the normal interest rate, which is higher than the rate applicable in the initial years, become effective. It has been also observed that many banks at the time of initial loan appraisal do not take into account the repaying capacity of the borrower at normal lending rates. Therefore, the standard asset provisioning on the outstanding amount of such loans has been increased from 0.40% to 2% in view of the higher risk associated with them. So, please note down that teaser rates interest on housing loans provision will be 2%, not 0.40% as usual in the other loans. The provisioning on these assets would revert to 0.40% after 1 year from the date on which the rates are reset at higher rates if the accounts remain standard. So these all are standard loans only. Next, restructured advances. Restructured advances as stipulated in the prudential norms for restructuring of advances. Advances restructured and classified as standard in terms of the Master Direction Reserve Bank of India in the year 2018, SCBs as updated from time to time, it is at the rate of 5%. Please note down, all restructured and classified as standard advances attracts 5% provisioning. All other loans and advances not included, which I have already explained now in case of standard assets above at 0.40%. So all other advances attracts 0.40%. Now standard assets over. Now next we will go for substandard assets. Substandard assets means it is a N.P.A account. That means non-performing asset, substandard asset. A general provision of 15% on total outstanding should be made without making any allowance for ECGC guarantee cover and securities available. The unsecured exposures which are identified as substandard would attract additional provision of 10%, that is total of 25% on the outstanding balance. Hope you all are understood. In N.P.A substandard asset, usual general provision will be 15%, whereas if it is unsecured advances, unsecured exposures, it will be 25%. That means additional 10%. Overall on outstanding of the advance, unsecured loans 25%, whereas secured portion is 15%. However, in view of certain safeguards such as escrow accounts available in respect of infrastructure lending, please note down infrastructure lending. Infrastructure loan accounts which are classified as substandard will attract a provision of 20% instead of the aforesaid prescription of 25%. So, infrastructure advances 20%, unsecured 25%, general provision is 15%. These all are for substandard N.P.A accounts, substandard assets. To avail of this benefit of lower provisioning, the banks should have in place an appropriate mechanism to escrow the cash flows and also have a clear and legal first claim on these cash flows. Next, we will go for doubtful assets. Doubtful assets, 100% of the extent to which the advance is not covered by the realizable value of the security to which the bank has a valid recourse, and the realizable value is estimated on a realistic basis. So, there is no security means 100% provision should be given on doubtful assets. Once the account is in substandard asset for 1 year, afterwards it will go to doubtful assets. So, in doubtful assets, D1, D2, D3, like that it will be there. In regard to the secured portion, provision may be made on the following basis at the rates ranging from 25% to 100% of the secured portion depending upon the period for which the asset has remained doubtful. So, unsecured portion totally in doubtful assets it is 100%, whereas if it is a secured portion means even though it is secured advance in doubtful up to 1 year 25% provision should be given, and 1 year to 3 years, that means more than 1 year up to 3 years the provision should be 40%. If it is more than 3 years, even though security is there, all the doubtful assets will be provided with 100% provision. This is most important. Please note down, up to 1 year 25%, more than 1 year to 3 years 40%, and above 3 years 100%. So here one more important point I want to tell you is with a view to bringing down divergence arising out of difference in assessment of the value of security in cases of N.P.As with the balance of rupees 5 crores and above. Please note down, 5 crores and above. Stock audit at annual intervals by external agencies appointed as per the guidelines approved by the board of concerned bank would be mandatory in order to enhance the reliability on stock valuation. Collaterals such as immovable properties charged in favor of the bank should be got valued once in 3 years by valuers appointed as per the guidelines approved by the board of directors. Hence, every 3 years stock valuation should be done, and above 5 crores stock audit should be annual basis. Finally, we are coming to now loss assets. What is loss asset? Loss asset means nothing, no security, nothing, no income, nothing it is gaining. These loss assets should be usually written off. If loss assets are permitted to remain in the books for any reason, 100% of the outstanding should be provided for. So, in short, I am totally giving you overall N.P.As or assets of the banks are classified into two: performing assets, non-performing assets. In non-performing assets, substandard assets, doubtful assets, and loss assets. Doubtful assets, doubtful asset 1, doubtful asset 2, doubtful asset 3. In substandard asset, the period of staying the asset is 1 year, and in doubtful asset, DA1 1 year, DA2 1 to 3, after 1 year up to 3 years completion, above 3 years D3, and afterwards it is loss asset. Loss asset is forever. So better to written off all the loss assets. If not possible for any reason, 100% provision should be made. Thank you one and all for watching this video, and I request you to please subscribe our YouTube channel Suvarna Chundi and get more and more videos on your YouTube mobile that YouTube. You will get more and more, and almost all latest videos we are going to provide you all. Thank you one and all. Have a great day ahead.